Disclaimer: this video is for educational purposes only. I'm not a financial advisor. I'm just a guy who has gotten lucky investing before. Past performance does not guarantee future results, and I am just as good at losing money as I can make it. None of what you're about to see is financial advice. And today I want to talk about a little stock that I think is pretty interesting to me, a little undervalued, and that is Centene. Centene is a health care insurance company. They're trading at a pretty cheap rate right now, $55 a share, $27.32 billion market cap. Subject to change, of course. Tomorrow's a new day. And I want to go over why I think it is a little undervalued, and it could keep going down. But it is interesting to me. So why is this stock so cheap? They are heavily reliant on Medicaid customers, and with the federal government and local state governments reconfiguring requirements for Medicaid and trying to cut costs in the Medicaid world, there comes some skepticism about the future of this stock, but I think that Mr. Market is missing a big bullish detail to this company. Commercial revenues, I have right up here on the screen, for the last 5 years have been growing pretty solidly, pretty reliably. And I mean, you can see 2021 they made $3.8 billion in revenue stream on commercial, and just this the last 4 preceding months on their latest income statement, commercial revenue is now sitting at $10 billion, increasing on average. What is that? $2 billion, $1.5 billion a year. And while Medicaid has fluctuated through the entire time, you can see 2021, $20 billion, 2025, $2.2 billion. And it has not really been that reliable. But their overall, also got to bring up this point, the other bullish point to Centene is that the United Healthcare has kind of been falling apart. They're the biggest healthcare insurance provider right now, and when the United Healthcare CEO passed away in December, people of the USA have become acutely aware that the claim denial rates of health insurance providers is pretty astonishing, to say the least. United Healthcare denied 33% of claims, and that's just what is publicly published. There are some companies that are, rejecting like 45%, estimated 45%, but they do not publish their data to CMS.gov. That is, in my research, a voluntary thing that healthcare insurance companies can publish. Now, if you notice in this chart, the best 5, the best one is Kaiser Permanente. That is a privately traded. I'd love to buy stock in Kaiser Permanente, but I can't. It's privately held. However, Celtic and Ambetter are both owned by Centene. So, with that being said, what I was on before is that their revenue stream, if you can see here, in the last 6-7 years, their revenue has increased on the back of customers increasing. I mean, you can see on that top. I'm sorry, I have the top one backwards than the balance sheet here, or the income statement here on the bottom. But so in 2020 they acquired WellCare, and that was their biggest acquisition they've ever made. This company has acquired quite a lot of companies through its history, and has done some interesting things with them. However, the overall memberships they have to their healthcare has reliably increased, and their revenue stream has reliably increased. You can see that huge bump in 2020, but $60 billion of revenue in 2018 versus $163 billion of revenue in 2024, and they're still, squeezing quite a bit of profit out of each year of that growth of revenue too. Now, the balance sheet is also in pretty good health. $16 billion of cash on hand is pretty good to their current liabilities of $34 billion. I mean, almost enough cash to cover half of their current liabilities, and also that is in a year that they're bringing in $163 billion of revenue. So I'm not too concerned about their short-term debt. They have a lot of assets as well. They keep acquiring companies, they keep acquiring new assets, and a quick little background on the CEO. She's so the previous CEO was CEO since 1996 and had a health issue in 2022 and had to exit in an emergency, and left the board in an emergency and passed away in 2022. And so this Sarah London has taken over since then, and it is interesting to note that she's of all of the executive positions within the company, she has held her position the longest. Now, there are a lot of senior management people in senior management that have previously worked for companies that Centene has acquired, and there are a lot of people that have worked in other senior management positions and then have been promoted. But it is important to note that a lot of the positions that they are in, they're new positions. So that's I would say that's kind of a bearish case. And then I have her educational history. She's CEO Sarah London's been working in different health sector career fields since 2008. She's been project manager in different companies, vice chairman of some other healthcare companies, and pretty interesting resume if you look at her LinkedIn. She has a public LinkedIn. However, up at the top right, you can see I have just 5 random companies, but some of the larger companies, I have their CEO approval. This is a vote of what the employees think of their CEO. 75%, you can see CNC at the top there. 75%, the highest CEO approval rating of all of these CEO. And these were just 5 random companies, larger market cap companies that I've found. And the employee reviews, 3.7 stars. compared to 3.6 and 3.2 from CVS, and the lowest PE ratio of all of them. So that is a bullish point that I would like to bring in. Now, this is something I would like to incorporate in more of my videos, is kind of grading different aspects of the company. Senior management was really difficult to grade for this company because they're all pretty new to their positions. That's why I made that note in my senior management page. And I have senior management as a minus. I don't think it's, to me, the ideal senior management is the founder of the company, has had a history of being very successful in the realm of business that the company is trying to run. Someone like a Jensen Huang, he has been with NVIDIA since the very beginning, and he has been very successful through the history of NVIDIA, and companies like that. But I'd say second to that is a person who has kind of stair-stepped in working their way up from a lower position into and seen all of the different aspects like Sarah London has seen. So anyway, and also the employees, really, 75% CEO approval rating for a healthcare insurance company is pretty good. Future revenue growth, I would say, is pretty bullish. A minus on that. With regulation changes, it could go down. Subject to change. But I kind of, healthcare insurance companies are always, they're a pretty reliable source of income, right? That's why Warren Buffett always sold Geico insurance in his early years, and one of his first huge acquisitions with Berkshire Hathaway was insurance. Balance sheet health, I have as just an A, not A plus or nothing, but nothing concerning really. Moat, I'd say C. There's no moat. They have competition all over the place, and it's really hard with insurance to create some sort of a moat. And then employee ratings is B. 3.7 stars on Glassdoor is pretty good, but it's the best of health insurance providers. However, 3.7 stars is not, I think Boeing is like 4.2, right? So it's, I know it's comparing apples to oranges, but there are some fields out there where they could just be better. Overall, at $55, value. Sorry, I didn't see that. Camera's in the way. A plus. $55 a share for this company is a pretty good value, and I would give this an A. If you're looking to add a company to your stock portfolio that is not going to go away, and this company could go down to $45. I mean, $40 would be a stretch. I don't really think it's going to go below 50, but it could. And my point is this is a good company to buy into, where it's like, if it keeps going down, just that would give me more confidence in buying more shares. This is a reliable company. They've been around for a long time. They've figured out new revenue streams throughout it's evolved for a very long time. And I don't really see it going anywhere. They're not being they're not being investigated by the Department of Justice like United Healthcare is. They're not getting sued by BlackRock for providing too much health insurance to their customers like United Healthcare. Their CEO didn't quit after 2 weeks after an earnings call like United Healthcare. There's a lot of people right now on YouTube and on messaging boards that are bullish on United Healthcare, and I think that these guys that are bullish on United Healthcare are kind of missing a much better pick here with CNC. I mean, they don't have the drama that United Healthcare does. They have revenue growth like United Healthcare does not. I mean, there is bearish reasons for legitimate bearish reasons for United Healthcare, and reasons for customers to leave United Healthcare to a company like Centene, and I just think if you're looking at, if you know someone who's really big on United Healthcare, you might want to send them this video and reconsider, look into this stock that I've called out here for $55. I don't think you're going to go wrong. Still an 8 PE ratio of 8.1, I think, after market close today. I'm not too sure, but it's been hovering around there versus United Healthcare, where after the crash, it's still at 12 PE, and it just keeps going down and down. And, I mean, if United Healthcare has a bad earnings call, like they just did, who knows what's going to happen with that. Anyway, if you enjoyed this video, please hit the like button. It really helps me out. Leave a comment. You guys have been awesome commenting questions and stuff. Right now, I do not hold any of this stock of this company. However, I plan to add some. There's a lot of good deals in the market right now, even though everything is like going up. There are still deals popping up. Elf just took off on me. Now I need to reevaluate Elf Cosmetics, and I'm still bullish on Google, and ASML. I've been looking into ASML. That looks to be a really awesome stock. So I know I've been lacking on putting out videos, but I think there's a few new ideas that I've come up with, and I'd really like to share them. So stick around.